Hi, it's Dwyer, gamblersadvisory.com, a free site. Always 1776.com, a free site. It is July the 3rd, 2023. Well, let's talk money. But first, understand, nothing I say in this video should be construed as investment advice. I want everyone watching this video to do their own due diligence. Be responsible for your own financial risk taking. Remember, the opinion you should follow should be your own. Just consider this video to be a second opinion from a complete stranger online. Now, my macro view of the world, and I know a lot of people are excited, and I understand the market, short term at least, is doing better than we expected. Right? I understand many people are expecting a melt up. That might happen. But just understand, bigger picture, I consider this to be a bear market rally. In other words, we're still in a bear market. Understand, the yield curves are still inverted. I haven't heard of a bull market emerging out of an inverted yield curve environment. Right? Let me also talk about the fact that student loans, the payments are going to be resumed later this year. That's going to put a significant damper on people's disposable income. So, in reference to some things I'm pursuing that I've mentioned here online, understand, I'm very happy. I know it doesn't look that way, but I'm very happy with Open Door's performance. I see that they're up over 8% today. Right? Understand, whatever Open Door is doing, I believe you need to maintain the hedge. For me, the hedge I'm using is SRS, an inverse ETF on real estate. Give it a look. Just understand I like a barbell strategy on real estate. Open Door is going to have a natural monopoly if things in the real estate market go well. Right? I believe you'll be a big winner if things in the real estate market go well. I also believe there is a possibility that if real estate gets extremely bearish, that the amount of home selling is going to be so extreme that Open Door might be able to thrive in that environment as well due to high transactions. Right? Volume sometimes can overcome diminishing margins. Right? But I need for people to understand that I personally feel real estate is overextended. I'm expecting real estate to completely crash. You're seeing it in certain areas. Right? Las Vegas, for example. And so I believe this is the time when everyone is giddy, when everyone is talking about the market accelerating, when everyone is talking about a short or shallow recession. I believe now is the time, just like my gardener here felt this was the time to crash this video. I believe people need to keep the hedges in place. And in real estate, that's SRS. Let me just point out, too, that I believe you need to hedge the entire market. I like QID, right? You want to keep your hedges in place. Let me also point out, too, I know energy has been soft. I'm not buying it. The last time I looked, right, you still had the Russia-Ukraine war going on, right? The one thing I know about life, and I know last year oil was $120 a barrel, and right now it's down around 70, right? But the one thing I know is that people continue to be unprepared, right? We're heading into fall and winter. I'm expecting there to be an energy crunch. So I'm in things like XOM, Exxon, EQT. Liquefied natural gas has certain environmental benefits to it, right? I remain in those. Let's talk about a new asset class here in this Gardner Ruined video, right? I believe that retail is changing. It's headed in a much more efficient direction. So I believe that Amazon is going to continue to thrive. Now, just understand, Amazon rents a lot of its warehouses. If you believe that people are not going to return to malls, that they're going to continue to do commerce online, especially as the economy deteriorates, they're going to look for bargains. They're going to want the convenience of operating from home. If you, like me, believe that gas prices are headed higher, folks are not going to want to hop in the car. They're not going to want to drive to go shopping. They're going to want to do clicks. I believe Amazon is in a great position. More importantly, I believe Prologis. The symbol is PLD. Again, Prologis. PLD is the symbol. I believe PLD, which is one of the biggest warehouse providers globally, is going to thrive, right? I believe you want to give them a look. Also, I believe as people downsize, they're going to look for places to keep their stuff, right? Storage units are going to thrive. I get that commercial real estate is having problems. I get that residential real estate, in my opinion at least, even as a holder of Open Door, is going to have problems, right? But I believe those problems are going to open the door for realty income. Now understand, realty income is huge. They're already a member of the S&P 500. The symbol is O, right? Realty income, the symbol is O. I expect them to thrive, right? Simply because as you decide that the mortgage, given the increased carrying costs on your 4-bedroom, is simply too high, right? If your adjustable rate has adjusted and now you're paying more than you want to, or if you have placed a house on the market and you realize that millennials, number one, have a different attitude toward housing than we did, number two, are looking at the mortgage and are figuring out that with their subprime credit scores, and let's remember, millennials have been burdened with student loan debt, right? When they look at their subprime credit scores and realize that their mortgage is going to be 8 to 9%, right? Not the 7% that people with above 700 credit scores are getting, right? When they decide they aren't even going to bid on your house and you decide you're going to downsize, you're going to sell the house regardless, well, you're going to have to find some place to put your stuff. That's where realty income comes in, because I believe this change is going to be systemic. I'm expecting realty income to do well. Let me close with one other controversial play that I've invested in, right? It's called Safehold. The symbol is SAFE. Again, Safehold. The symbol is SAFE. What I want people to do is to just picture that they own a business and they own the building that the business is in. And let's say the foot traffic is down, right? You have a lot of people, particularly in commercial areas, staying at home, right? Remote working. The foot traffic is down. You need money. And you understand that we're headed into a credit tsunami where the availability of credit is going to dry up. So you want a secured loan at a low interest rate. You also want tax deductions. Now understand, if you segue into a ground lease, in other words, if you can find a company who you could sell the land to under the building, right, for, a financing deal where you then rent that land from the outfit that you've sold the land to. And now, because you're paying rent, you can actually deduct the rent payments for your business. You're going to find a very cheap source of financing because the other company is getting the land underneath your building. They're willing to have you repay the loan or really the line of credit, because it's a revolving situation, for 60 years, 90 years in some cases, right? Well, just to understand, Safehold is a company that buys ground leases, right? They will buy the land under your building with the understanding that they will then rent you back the land, right? Understand, at the end of the lease, they then get the land and the building on top of the land. Do a lot of research on ground leases. What you'll find is that Safehold right now has a lot of ground leases in Manhattan. In other words, they're grabbing prime real estate. Understand, this is pure passive income because it's a triple net lease where the leasee is paying all of the bills, right? What Safehold does to benefit from this is it grabs the land. It then is able to provide cheap financing because, of course, it has the land. It has become the landlord for the leasee, right? I like the business model. I like the location of many of their ground leases. Places like Manhattan, places like San Francisco, places like Austin. In other words, growing places. The price on Safehold is down, right? Understand, I get interested in investments when I feel they have dropped in value, right? Safehold, you want to look at the full chart. You want to realize that right now, anything related to commercial real estate is extremely unpopular. You also want to realize that in some of the markets I've named, notably San Francisco, you have a very bad bear market in commercial real estate, right? So this is an investment where you see the house is on fire and you decide, you know what? I want to buy the land under the house because I have a longer term vision and I believe things are going to turn around. I like the model, right? Safehold is something I now have a position in. Again, the symbol is SAFE. Just be aware of the fact that if you look at a 52-week chart, it's on the lower end of the scale over the last 52 weeks, right? It's on the lower end of the 52-week range. But the model is compelling. This is a feast or famine situation, right? If Safehold grabs enough properties, they're going to be a dominant player in, let's say, Manhattan real estate, if you don't consider them to already be a dominant player in Manhattan real estate. Understand, too, if you know real estate in Manhattan, you have a lot of wealthy families who, through the use of ground leases, have lease their properties to third parties, right? This is how you make money. It's passive income. You own the real estate in areas where there isn't a lot of real estate. And the market has already placed a premium on that local market, right? As they say in real estate, location, location, location. Safehold has a beachhead, quite frankly, figuratively speaking, in Manhattan. Given that the stock is down, that appeals to me. I'm in. Those are the ideas I have today. Those are the directions that I'm leaning in the comment section of this YouTube video. Now that the gardener is conveniently gone, right? When the video's ending, of course, in the comment section of this YouTube video, tell us your thoughts. Tell us what has caught your attention in this stock market. Just understand, though, I'm bearish in general. I believe this is a bear market rally, right? I believe you have to pick and choose. I understand the people who say, hey, I'm going to grab bonds at these interest rates, right? I see inverted yield curves. I see a lot of layoffs about to happen. I see a lot of layoffs caused by technology, right? AI. I see credit tightening. I see a lot of these companies that have been getting by because of artificially low interest rates now being unable to pay market rates, right? That's the world I'm living in. So in that world, I'm not dropping the QID or SRS hedges. I'm just not, right? At the same time, I'm holding on to Open Door because the valuation just got so low, and I do believe we're headed into more of an online existence. Speaking of online, right, I'm in Prologis, in part because they're one of the companies leasing a lot of warehouses to Amazon, and because I think that business model plays well in the world we're heading into. Right? You're going to have a lot of businesses operating out of warehouses using the internet as an interface with customers, right? And of course, I'm into realty income, right? The symbol is O, because I believe a lot of people are going to start downsizing homes and they're going to start storing stuff in storage units. That's how I see it. Let me hear from you. And of course, I'm also into energy, EQT, which has been good, right? EQT, Exxon, which has been good, XOM, right? I see Warren Buffett has bought even more Occidental, right? I believe in Chevron. Now that Venezuela is opening up a little bit. Why? Because I believe that, as usual, we're unprepared, and if this winter is a cold one, at a time when inflation continues to run rampant in places like the United Kingdom, right, I believe energy is going to be a concern. I believe the prices are going to spike. That's how I see it. Let me hear from you. I hope you leave your comments in the comment section of this YouTube video. I apologize for the background noise. Thanks for stopping by.